This is Patrick MontesDeOca with the Equity Management Academy Live Trading Room. I would like to share with you the podcast for the Associated Press published over the weekend.
Gold. When a major asset is ignored,
major bottoms do unfold. This is the Equity Management Academy Mean Reversion Trading Weekend podcast for November 6, 2021. Summary. The U.S. labor market got back on track with a larger than expected payroll. The faster pace of hiring shows that more Americans return to work as COVID cases continue to decline. Some 7.5 million people lost expanded federal unemployment benefits, which may have contributed to the increase in people on payrolls. The demand for supplies across the economy looks to increase in the short term, and everything from computer chips and grains to labor and lumber. U.S. job growth gets back on track in October with 531,000 gain. The U.S. job reports came out. The U.S. added 531,000 jobs. The U.S. labor market got back on track with a larger than forecast payroll. The effects of the Delta variant appears to be easing. The unemployment rate fell to 4.6%, while the labor force participation rate remained unchanged. The faster pace of hiring shows that more Americans return to work as COVID cases continue to decline. Some 7.5 million people lost expanded federal unemployment benefits, which may have contributed to the increase in people on payrolls. This unemployment rate report is bullish for precious metals, as fears that the Delta variant would expand is waning. The end of the pandemic may be in sight. Many people are returning to the workforce. This is an indication that the economy is picking up. We are still in a supply chain bottleneck, however. Over the next 3 months, we are going to see more demand come into the economy. And we are running into a wall of a lack of supplies. We have to allow for this relationship to unfold. Prices are going to adjust. Even though we may get a short-term period of price inflation as we move into next year, this situation will resolve and the economy will return to some sort of normal balance between supply and demand. The demand for supplies across the economy looks to increase in the short term for everything from computer chips and grains to labor and lumber. Taiwan is a major supplier of computer chips, and China's increasing aggression against Taiwan as it seeks to force Taiwan to become a part of China only increases the uncertainty about the chip supply. The inflation rate appears to be hovering around 5.4% if you include food and energy. The rate is significantly higher. They were removed from the inflation index because they were thought to be too volatile. If we are looking at inflation now as a measure of the broad expansion of the money supply, this is not transitory. The stock market continues to make gains. The gold market and the stock market have not done what some analysts predict: collapse, leaving the field clear for digital currencies. People are looking for places to put their money that are decentralized, which is why Bitcoin has attracted so much attention. Some of the money that has gone into Bitcoin has come at the expense of investments in precious metals. Faith in the US dollar is declining, which also explains part of the attraction of Bitcoin. Digital currencies, however, still have the flaws, such as fraud, which is largely hidden, but apparently is far more common in those markets than in precious metals or other regulated markets. Gold and stocks are anticipating the opposite of what everything is thinking. Gold and stocks appear not to think that interest rates are going to go up next year. Interest rates are probably going to be a major issue. We will have to see what the Fed does with interest rates. Gold and stocks appear to be forecasting that interest rates will not go up. So there is no threat of higher interest rates, even though there is talk of higher rates and tapering. Gold Dow Jones spread relationship. One major anomaly is the spread between gold and stocks. It is at a historic level. Either gold will move up significantly to be in a more historic ratio to stock prices, or stocks will go into a major correction. I believe that this is an opportunity for precious metals, Equity Management Academy CEO Patrick MontesDeOca said. With an asset that is being ignored and no one wants it, it's time to accumulate. This is going to turn in any time. Gold will adjust to its mean. Gold will break out of the 1830 level to the 2000 level in the coming year before September 2022. End of quote. Let's take a look at the monthly signals and see how we can take advantage of this potential breakout expected and position into the beginning of the next 360-day cycle that projects gold prices to trade above $2,000. November 1, 2021, Gold Monthly Report was published. Summary: the monthly trend momentum of 1788 is bearish. The monthly VCPMI of 1782 is bullish price momentum. A close below 1782 stop negates this bullishness neutral. If long, take profits 1819 to 1852. The close above 1788 negated the bearish trend to neutral. The close above the VCPMI of 1782 unfolded and activated the targets of 1819 and 1852 for the rest of the month.
Thank you for listening. If you want to learn more about what we do, please go to the Equity Management Academy, ema2trade.com, or listen to any of our previous episodes. Good morning, everybody. Patrick MontesDeOca here once again. Getting back into the markets here right away. We're taking a look at a lot of green on the screen, and digital currencies are sharply higher. Metals are sharply higher. Gold is up 6.30. Silver is up 23 cents. Let's watch the market here a little bit, and we can take a look at here and see what opportunities we have for today. The next target for gold is the sell one weekly level of 1843. We have some short-term targets here, daily, 1821 to 1843. So the 1841-43 level is a very strong harmonic level here for today. These are targets that are active for today. What we see here is basically the Fibonacci fan trend lines that we have made from the previous high that we made here around 1920 back in May to the low that we made recently on September 28. This is the seasonal low that we anticipated, and the market confirmed a low, and a seasonal low is in place. And we could be looking at potentially at a seasonal low, not a seasonal low, but an annual low in place. So what we have here is the seasonal low, which is the 360-day cycle that we take a look at, which begins on September 28, 2021 to September 28, 2022. As we move into the later part of this year here, it looks like we're building an annual low, a yearly low. The bottom of this range of this low was 1758. This is a secondary high that we have seen so far. And what you see here is the market reverting from the blue levels that are indicated. That essentially is the artificial intelligence of the variable change in price momentum indicator that tells you that you want to accumulate buying in blue at these levels here. And the confirmation obviously is the market reverting from here. So this information is prospective information for you self-directed traders that are serious about using a mathematical matrix, a mathematical system to identify the extreme levels above or below the market, basically identifying the extreme levels of speculation. In the extreme level in blue, the market, when it came down, pretty much the speculation or the sellers, the supply, brought the market down to a seasonal low on September 28, 29. Regardless of the supply, you see here the market synergy reverting exactly to almost the date when the cycle low was expected. And if we want to analyze the other indicators here, we've came down into the uptrend support trend line, you might say, from this big uptrend channel that we're building up that points to gold back up to about 1968 as the resistance of this line that essentially gravitates to the right side of the chart. We're looking at about 1982,000 pretty much as the target for this range. We're breaking out of the 50% Fibonacci retracement, and the targets for the week that we have here today are 1843 to 1861. These are the targets for the rest of the week. Silver is entering into this red zone. The targets for silver are 2465, 2506. On the short end of the market, you can see 2445 has been completed. We reverted down to a low of 2343, right into the blue level, and made a secondary low. The seasonal low in silver is 2141. The potential secondary low or the annual low, we're looking at 2304. The weekly targets for this week for silver are 2405 to 2506. Let's take a look at Bitcoin. Bitcoin has completed the weekly sell to target of 66,778 as we speak. And this is a place where we have recommended to take profits up here. This is the sell to weekly level. And by completing this target here a couple of times, the signal now has activated a bearish weekly trigger point from the sell to level. The reason the market closed up above the daily target of 63,575 is a breakout. And it tells you here that what you want to do up here is lock in some profits. You don't necessarily need to go short because the market seems to be breaking out, and the path of least resistance is for the market to break out above the weekly 66,078. And then we're looking at the monthly levels at that point. When the market breaks out above the daily by a sell to level, it goes neutral. And then the system looks at the weekly numbers and the targets are completed. When the weekly numbers or the market closes above the sell to weekly, the weekly goes neutral, and then we take a look at the monthly targets. And if we take a look at the monthly targets here, we're looking at bear with me, please. The monthly targets are all the way up to 82,515. The sell one level monthly is 72,650. The sell two level is 82,515. The sell one level is 72,650. The monthly average is 58,165. So we're on the way to the target of 72,650. If we close above the weekly level of 67,778. The gold sell one level here is 1832 for the day. The sell two level is 1843. The market is in an uptrend. Daily and weekly, by the fact that it's trading above the average price that you see here in green. 1809, 1800 is the weekly average price. 1809 is the daily average price. So the daily program has activated the targets of 1832 to 1843. The weekly signal is bullish with targets of 1841 to 1861. been a pretty positive day here, and I would continue to recommend to hold on to your long-term swing or position trade on digital assets, on precious metals, gold and silver, as I think we're beginning to see life come back into the metals here, as the article pretty much titled describes that when a market is ignored, like gold has been for the past 12 months and more, in silver, usually that is the time where you want to accumulate, where you want to add to your core position, to your physical market. I don't think it's over yet. I don't even think we have seen the beginning. So prepare and hold on to your long-term position. I think the market is coming back to us with a vengeance. And this is the kind of a market that when it goes, if you're not in this market committed, you're going to miss it. You're going to be chasing the market like 90% of the people do. The great thing about the VCPMI is that I use it as a GPS to identify the extremes of speculation, which is where I want to be as a trader, to take the opposite side of the market. This is a contrarian indicator. It thinks differently. And right now, a lot of people are wondering when the price of the metal is going to come down. Well, guess what? I don't think it's going to come down. I think it's going to continue to move up in the direction that we've been expecting. It will pay off. And hang on to your position. And thank you again for the opportunity to share this incredible information with you. And until next time, my friends, be well, be safe. I'll talk to you soon.